Over the last 1 to 2 years, I haven't really been paying too much attention to my long-term stock portfolio. I've been a bit too focused on trading, so I kind of ignored this. But a few weeks ago, I decided to pump more money into my long-term stock portfolio. So I thought it's time for me to relook the entire thing. It's time to revamp my portfolio. So in today's video, I'll go through the 6 different ETFs that I currently own, why I own them, as well as how much I put into each individual ETF. As usual, the disclaimer, these investments, they fit my investment goals as well as my risk tolerance. So you guys can watch this video just for education, have a look or a listen to my thought process. But at the end of the day, you need to decide which investments fits your goals. So I'll be showing you guys my Interactive Brokers portfolio. This is where I hold my long-term stock investments. They are a really good broker. They are really well known, not just in Malaysia, but globally. They have a very high reputation. So if any of you guys want to invest in stocks, ETFs, all those things, then check out Interactive Brokers. I'll leave the link down below. So let's get to it. The first investment that I'll be talking about is cash. So yes, I know technically this is not an investment, but I do have quite a big chunk of my portfolio here. So I thought I'll just explain it to you guys. Basically, I sold some stuff recently because I wanted to revamp my portfolio, and I also pumped in more money, and I decided that, now's not the right time. It doesn't feel good for me to dump all of this into investments. So that's why I'm holding a lot of cash. I don't know, the market just seems a bit toppish. It seems like, it's chopping around, can't go any higher. And with the elections coming up, I thought, why not just wait for it? I don't mind buying later on at higher prices if it turns out that I'm wrong. But for now, I do have some investments still, so I thought just let that run, and then later on, I'll decide when I want to invest this money. Now, let's get to the real stock portfolio. So how I'll do this is I'll talk about first my largest holding, and I'll go smaller, all the way to the smallest allocation. So the largest one is obviously VOO, and this one tracks the S&P 500. This is the bedrock, I guess, of most people's investment portfolios. And I know some people even go 100% all into this ETF. And it makes sense. The US stock market has been the best performer by a large margin over the last 10, 15 years. Maybe things will change, maybe it won't, who knows. For now, I do think that US will still lead the charge just because they have so many innovative companies. Performance-wise, this ETF has returned on average over the last 10 years 13% per year, which is really crazy. I personally don't think that this will continue. I just think that, the last 10 years we've been in an extremely good bull market for the US. But still, if I can get, 7-8% a year, I'd be happy enough. So I was considering switching this out for the QQQ, which is a Nasdaq 100, just because it's been performing extremely well as well, even better than S&P 500. But at the end of the day, I decided that for a long-term portfolio, for a long-term investment, the S&P 500 is more diverse, so it is a better choice. In fact, the QQQ, it's pretty much all into tech, or I think maybe like 50-60% into tech companies, which they have been performing well, but like I said, things could change. I do still have, the big tech companies in the S&P 500, just a smaller allocation, which to me is good enough. Another thing to note on this holding is that I know that, if you invest in an Irish domicile ETF of the S&P 500 instead, like the CSPX, it is better just because of withholding tax. And, I've just been a bit lazy to make the switch, but I will do so very soon. I'll do it right after filming this video. But yeah, if you guys are not a US citizen, then it does make sense to go for something like CSPX compared to VOO or even SPY. Moving on, my next largest allocation is VFMO. I have a 25% allocation here. Basically, it is a momentum ETF covering the US market as well. To be honest, I don't know if the performance of this ETF will be very different from the S&P 500, but basically I wanted a 60% allocation to the US. So what I decided was 35% to VOO, 25% to this ETF, VFMO. But there are actually some pretty major differences. So 2 big things for me. Number one is that the S&P 500, by its nature, it invests in the 500 largest companies in the US, which means that basically every holding there is are large cap companies. Whereas for VFMO, this one, it invests in a mix of small, medium, and large companies, so it's nice to have a slight bit of diversification. Secondly, as the name implies, this ETF is a momentum ETF. So the fund manager, which is Vanguard in this instance, they have a quantitative model to invest in the best performing stocks in recent times. So basically their thesis is if a stock is doing well, then it'll continue doing well for the near future. You guys can see the difference in their top holdings is actually very, very different from the S&P 500. It doesn't hold any names like Amazon, Apple, Microsoft, Nvidia. These names are not even in the top 10. Instead, we'll see names like AT&T, Costco, and Boston Scientific. So again, the reason that these are the biggest holdings right now is because these names I just mentioned, they have been really good performers recently. Performance-wise, they haven't been around for 10 years yet, so we can't see the average for that period, but they have been around for 5 years, and the average annualized return is 15.9%. Again, that is extremely high, and I don't think it will continue. So the third ETF that I own is VXUS, and this one covers, global stocks, every single country, or maybe not every single country, but many, many countries in the world, except the US. And here I have a 20% allocation. So I know, just like 3 minutes ago, I said that, I do think that the US will continue to outperform, but I do want to diversify a bit. I don't want to go all in to the US and then it goes through a bad period, it goes through a recession, and then my investment portfolio suffers. Also, I do think that, global stocks have been very unloved over the last few years, at least a lot less loved than US stocks. And I do think that now is the time for them to make a comeback. So I did consider a few different ETFs as well, especially VT, which is extremely popular. But at the end of the day, I decided that this was the best option for me. The reason for this is that the entire purpose of me holding this ETF is that I wanted to diversify away from the US. Whereas an ETF like VT, it covers every single stock market in the world, and because the US performs so well, they have a very large allocation to the US as well. So yeah, that's basically why I chose VXUS. So with this, we can see that it invests in many different countries. It has allocations in countries like Japan, India, China, Taiwan, all these kind of countries. And if we scroll down and down and down in terms of their market exposure, we'll even see names like Singapore and Malaysia. Performance-wise, they're not doing nearly as well compared to US stocks. Over the last 10 years, they only have an annualized return of 5.5%. So yeah, I know, they haven't been performing the best, but history might not repeat itself. Maybe in the next 10 years, these companies will start to do well. Moving on to my fourth largest holding with a 10% allocation in my portfolio, and that ETF is VWO. So again, similarly, this one invests in global stocks. It doesn't include the US. But the big difference between this one and VXUS is that this one is mainly focused on emerging markets. So yes, VXUS does have exposure to emerging markets. I just wanted a bit more. So from their holdings, we can see they have a much larger exposure towards countries like China, Taiwan, India, basically growing names. I don't know if China is still considered a growing name, but yeah. And they also have exposure to more niche countries like Saudi Arabia, Thailand, and also South Africa. I'm kind of surprised that they don't have a lot of exposure towards Vietnam. I feel like Vietnam might do well, but maybe, their stock market just isn't performing as good as the economy. Anyway, my thinking here is similar in terms of why I invest into this ETF. I know that recent performances haven't been the best. They've been struggling. This is mainly because of China. The Chinese economy has been doing really bad, and that's why Chinese stocks are down bad as well. But things could change, and as emerging economies, they do have the highest potential for growth. So returns-wise, it's also not so great. To be expected, over the last 10 years, the annualized return is only on average 4.2%. So this one is actually the lowest in terms of historical performance, but that doesn't matter. Like I said, my thinking is like this. I do think that the US will continue to outperform for the next few years maybe, which is why I have the largest allocation there still at 60%. But I do want some diversification to global stocks with a slight bias towards emerging markets. Finally, my last two ETFs, I'm going to combine them and cover them at the same time because to me, they serve the same purpose in my portfolio. So these two ETFs are IBIT for Bitcoin and GLD for gold. I know technically these are not equities, these are not companies that I'm investing in, but since I'm investing in it via ETFs, I thought just include it here. So both of them get a 5% allocation each. It's nothing huge, and the reason for that is because, like I mentioned in a recent video, my favorite investments is still stocks, is still equities, which is why I don't have too much here, but I do have some crypto holdings in other places as well. So as a whole, my crypto holding is maybe slightly larger than 5%. Anyway, let's address it one by one. Bitcoin to me is extremely simple. I'm not fully convinced by Bitcoin. I don't think that Bitcoin will replace fiat currencies anytime soon, but I do think that having at least a small allocation in my portfolio, it makes sense. With a small allocation, if Bitcoin really starts to go to the moon, it will give me some nice profits. But if Bitcoin goes through a major bear market as well, then at least it won't hurt my portfolio too much. To me, just personal opinion, don't take this as investment advice, but I do think that for most people out there, having a small allocation to Bitcoin, it does make sense. For gold, I know that I made a video a few months ago saying how I'm not a fan of investing in gold, but I've kinda changed my mind. So over the last 6 months, gold has been performing really well, and it made it clear to me that when things are rough, when there's a lot of uncertainty out there, when there's wars, conflicts and all that, gold does seem to perform well. So people still see it as a safe haven asset. So to me, it does seem right now like a good alternative investment to have alongside Bitcoin just to hedge things out a bit. I don't expect, mega returns from gold, but to me, it's nice to, like I said, just have a small allocation there. The historical performances of these two holdings, to me, it doesn't really matter because I know that they go through periods where, they don't really move much, and then they also have periods where they basically make huge moves. But still, I'll share the historical performances just, as an FYI. GLD over the last 10 years has an average annualized return of 7.6%, which is actually not so bad. IBIT for Bitcoin, it is still an extremely new ETF, so we don't have even 5-year historical data. So let's just look at Bitcoin performance. I'm sure you guys know that it has performed extremely well. In fact, over the last 10 years, the annualized return is 68%, meaning if you invested 10 years ago, every year on average, you make 68%. Those are crazy numbers. I don't think in any world that this will continue for the next 10 years. To me, if you can get me 20-25% a year, I would already think it's a really good investment. So that's my entire long-term portfolio that I've just recently adjusted for. I think I've got some good exposure to different asset classes as well as different countries. Like I said, I haven't invested a lot of my cash. I'm still holding a lot of USD. I am trying to wait for, a slight dip or maybe even a bear market, even better for me to deploy that cash. If it doesn't come, then maybe I'll just continue DCAing over the next few months. So let me know, what do you guys think about my long-term investing portfolio? Am I missing any particular ETF that you think could be a good addition? Like I said, if you guys want to invest in stocks, ETFs, all those things from many different countries, then check out Interactive Brokers. The link is in my description below. Thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.